Hello! Today I'm going to show you how to post general journal entries to T accounts. So the purpose of this process is to figure out what is the balance of each account that you used in your general journal entries. So for example, looking at my first transaction here, I know that my cash was debited for $10,000, meaning cash increased by $10,000. But a further question you could ask is, how much cash do I have in total? Right? And the journal entries don't show you that. So the T accounts are going to help us figure out, well, how much cash do I have in total? How much equipment do I have in total? Rather than just how much each of those accounts changed by. So first thing I did was I set up a T account for every account that I used in the general journal transactions. So we call them T accounts because they kind of look like a T. And the reason the cash is so big is cash tends to have more transactions, so we usually make the cash one a little bit larger. And the first thing you're going to do here is you're going to look at your first journal entry, and you are going to find your first account, in this case cash, and you'll see that there is a debit for $10,000. So we find that T account and we put $10,000 on the debit side. Now notice that it's not explicitly stated that the debit is the left hand side of the T account, but we are going to assume that whenever we use T accounts. And just in the same way, the right hand side is always going to act as our credit side for any of the T accounts. Alright, so moving on to the second account here, we have equipment, which is debited for $20,000. So we'll find equipment, here it is, and we'll put $20,000 on the debit side. Then we'll move on to common stock right here. This one is a credit for $30,000. So we have common stock here, and we can put $30,000 in the right hand side for the credit. Now a useful thing to do as you're going through and posting these journal entries is to somehow block off or indicate which journal entries you've already posted. So since I'm in Excel here, the easiest way is probably just going to be to highlight these ones. So I know, alright, I've done this first transaction. Alright, so moving on to the second transaction, we have telephone expense. That's a debit for $100. So we'll go to telephone expense, put a debit for $100, and we also need a credit to cash for $100. So here's the credit side on cash, and we'll put in $100. Let's highlight that one off to indicate we finished it, and move on to July 2nd here. So we've got equipment, and that's debited for $3,000. So we'll go to the equipment account here, and we will put in a debit for $3,000. And then for accounts payable, we've also got $3,000, but in this case it's going to be a credit. So we'll put $3,000 here for accounts payable credit. So you'll continue this process until you've posted every one of your journal entries. So what I encourage you to do now is to pause the video, and if you haven't already, to copy down all of these T accounts and see if you can finish the rest of these journal entries, putting the information on to the T accounts. So I'll give you a minute to do that, and I'll see you back here in just a second. Alright, welcome back. So now I'm assuming that you've created all these T accounts, and now would be a good time to check to see if you have the same numbers in the same place as me. And once you have that all checked and good, then we can move on to the next step, which is to find the total of each T account. So let's start with cash here. We have three numbers on the debit side, so what you're going to do is you're going to add those three numbers together, and I believe you should get 11,100, so we'll put that right there. Add all the numbers together on the credit side, and I believe that comes to 3,475. And you can also draw a little line here just to indicate those are not part of the regular transactions. Now what you're going to do is you're going to take the larger number, 11,100, and subtract the smaller number, 3,475. And then on the side of the larger number, you can write the balance. So in this case, the balance is 7,625. So 7,625 is the balance you get when you take 11,100 and you subtract 3,475. So that tells us this company has $7,625 after all of these transactions have been completed. So you can move on to the other accounts. Accounts receivable here has 800 on both sides. So when you balance that out, it's going to be 0. So you can still put your line here. and you're going to put that on the debit side because accounts receivable has a debit normal balance. So we'll put balance of 0. Moving on to equipment, same idea here. A lot of these are more simple than the cash case because cash just had a lot more transactions. But for equipment, just add up the two numbers. You're going to get a balance of 23,000. Accounts payable is going to cancel itself out, meaning that the balance is going to be 0. We're going to put that on the credit side because accounts payable has a normal credit balance as it is a liability. And you can continue doing this. So even if they have a number there, I guess it's up to you whether or not you want to rewrite and make it official that you have the balance here. Otherwise, your teacher might be okay with you just leaving it if there's only one number. But for here, I'm going to total these up and have a balance. Alright, so that is the completion of the posting and finding the balances of the T accounts. So again, a reminder, the reason why we do this is because the journal entries only tell us how much each account changes by, whereas the T accounts actually tell you how much of each item you have. So how much equipment we have in total, how much common stock we have in total, how much cash we have in total. And that's something that's not reflected directly in the general journal entries.